Thank you, our dear viewers, for remaining with us here at Smart24 TV. The program is Financial Markets, where we specialize especially in capital markets, shares, bonds, and so on, giving you first-hand information here at Smart24, where we drive business. So I'm still with Mr. Andrew Mwima, an expert from Uganda Security Exchange, and we are talking about shares, bonds and bills, okay, and investment in capital markets. So Mr. Andrew, before we went into the break, you talked about small, medium enterprises being able also to benefit from this. We've had so many things like IPO or initial public offering, primary, secondary market. Could you throw more light on what these terms are and what they benefit?
Okay, thank you, Anthony, and good morning once again, our viewers. An IPO is a short form for an initial public offer. Initial public offer. So what this simply means, it's that before a company starts trading on the stock exchange, it has a window where it advertises and invites the public to buy shares in its business. So that window is what we call an offer period or an initial public offer. It could take a month, it could take weeks, but after that, the company starts trading on the secondary market. Now, when it starts trading on the secondary market or at the stock exchange, it now becomes the secondary market, meaning that whoever missed out in the primary market can now buy shares from the people who bought.
In other words, what you're saying is that the IPO is the primary market, and it lasts only a given period of time. When the company has not yet been listed, or before, after it's listed.
It's in between. In between.
Okay.
But here the company advertises and invites the public to buy shares. Yes, now that is the primary market. Once it starts trading on the stock exchange, you now buy shares from the people who bought in the primary market. That is what we call the secondary market, and for it it's indefinite until the company either delists. Yes.
Now, talking about still the primary market, this is a company coming to the public to offer maybe shares.
Yes.
Are there any specific benefits of buying shares on the primary market rather than the secondary market, which is selling shares after already the company has been declared listed?
Okay.
Are there any benefits of that?
Yeah, historically, according to at least statistics, many times when you buy in the primary market, you will get the shares at very low prices. There are usually other incentives like bonus. You get bonus shares. And traditionally, there has been a habit in the past where between the IPO and the trading on the secondary market, shares can even jump as high as 300%, 100%. So it's sometimes a good area to cash in, meaning that you can buy a share at 100 and in 3 weeks' time it can appreciate by 200% before it starts trading on the secondary market. That is why most people actively take part in IPOs, because their history sometimes repeats itself and you end up making that huge gain once trading starts on the secondary market.
Okay, so we've said the primary market, the public is buying shares for the first time in that company, and the secondary market, we have the company actually, they already people who are already holding shares in the company are selling shares. Now let's talk a little bit more about the secondary market. Do I have to sell to people who are already shareholders, or I can actually sell shares to people outside the shareholders?
Thank you, Anthony. You can sell to anyone. You could. It depends on the market. The people who are existing shareholders may want to expand their portfolio, meaning they can instruct their brokers and give them orders to buy. But then you could have people who missed out in the IPOs for some reasons. Maybe they didn't have money then, that they have got some disposable income and they want to get in, so you can sell to anyone.
Oh.
Yes.
So someone who is a member of the public and is not anywhere attached to any company, doesn't have any shares, can actually buy from a person who has shares.
Absolutely.
Okay, we'll talk more about that later. Now, there, of course, this business sounds too good to be true, because people are saying, I can actually sit home, invest money in this company.
Yes.
It's run, I don't know how it's run, I don't know who runs it, I don't even know the CEO, but I expect money at the end.
Yes.
What are some of the downsides? What are some of the risks that are involved in the business, and how can we manage these risks?
Yes. Now, the stocks as an asset class are risky. Yeah, risky. In fact, according to financial analysts, they are one of the riskiest asset classes, especially relative to the bonds.
So you're actually advising people to invest in the riskiest business.
Yeah,
yes.
I will come to that.
Okay.
Yeah, but like you've also rightly alluded, still according to experts in investments, the higher the risk, the higher the return.
Yes.
For people who are young like you, Anthony, anybody under 60, I think you need that exposure.
I might actually be above 60.
I don't think so.
Okay.
But once you don't expose yourself to risk, you miss out on return. There are other safer assets where you can put your money, but they limit that growth in terms of what you would have gained. Just to give you facts still, I told you that there are people who bought shares of BAT at a low of 600, 500, and they sold out at 30,000. That is a return in excess of 3,000%.
Wow.
Now, for the safe assets, the best you can make sometimes in a year may be 15, 12, or even 14% for the safe assets. But still, once you align yourself with this risk, you're exposed to a downside, like you said. Any market is susceptible to demand and supply. Now, as long as a share has factors that may be causing an increase in supply of their stock on the stock exchange, that's an indication that their share price may come down. So the reasons that cause shares to drop.
Supply, when there's a lot of shares, the prices drop, right?
Yes.
Demand, when the people are buying shares a lot, the share prices actually increase.
Absolutely.
Due to shortage of shares.
So when there is also a decline in demand, it's not a good indication. Just if you ever sat in an economics class, commerce, and they tell you factors of demand and supply, I remember almost everybody will get 25 out of 25 because there are so many. So it's the same with shares. Many things cause share prices to drop and to increase. They could be company specific. You could have shares in a company, and for some reason that company goes through a trying time. For example, those in construction, there was a time where one of the listed companies, for some reason, they maybe borrowed money expensively and they were struggling to pay. The interest cost was building. So that caused a company-specific problem, meaning that it was eating up a lot of their profits. So as such, their prices started declining. You could have bought shares in Kenyan Airways, for example, and the companies, the workers in Kechu go on an industrial action. So that may be an indication that the business is going to go through a very trying time. Or people who bought shares in those Malaysian airlines which crashed many years ago. So all of those factors could be cause the share price of the company in the aviation industry to decline. Then they are industry specific. There could be a regulation that negatively impacts banking stocks. Perhaps they open up that space which has been unique for bankers to the telecom industry. I'm using broad examples, For example, in Safaricom, KCB, and Equity Bank, there are those regulations which were passed in Kenya which were kind of eating away part of the business of banks and giving it to telecoms.
Yes.
So shares of Equity Bank, KCB absolutely declined, but shares of Safaricom and other listed telecoms went up. Then there are those economic broad reasons.
Yeah.
In the times we are in, I don't know whether this question was going to come up, but you will notice that commodity prices are appreciating everywhere. Fuel prices are appreciating. In economics, you can say that there is a deterioration in the business environment. Businesses operate in economies. Now, such factors will negatively impact most of the listed companies and the other private companies, causing share prices to decline. So those are some quick examples I can give to point that person who wants to invest in shares in that direction. You're actually exposed to a number of factors that can cause the company, the industry the company is in, the economy to negatively impact on your investment.
Yes. Now, on the downside as well, in Uganda today, recently in the news, there has been something from Bank of Uganda that says that Bank of Uganda has not licensed anyone to carry out cryptocurrency transactions.
Yes.
And I want to understand, is there a difference between cryptocurrencies and actually capital markets? Because some people, whenever they hear of capital markets, they refer to, oh, you're talking about those things of cryptocurrency, people have been cheated.
Yes.
So what exactly is the line between cryptocurrency and capital markets?
Okay. Interesting question. And as we speak, the Capital Markets Authority and the Stock Exchange do not yet have the regulations and even products in the cryptocurrency setting. So it's not yet a financial instrument that has been fully incorporated in our framework as we speak, but the financial markets as a whole are evolving. So I do not want to but okay, I could even prophesy, but I think where we are headed, the financial markets will have either a future on the Bitcoin and some of these cryptocurrencies. But as we speak, no. And of course, that is also something which a person out there should look out for. Sometimes you're safer investing in a financial instrument that is regulated by either the Capital Markets Authority or even Bank of Uganda, because you have where to run in case there is a problem. But many times people rush and invest in financial assets and instruments which are not regulated. And also, just like I hinted, you invest in a share of MTN, Airtel, DFCU, there are many things you're going to look out for which could impact on you. Now, when you invest in a currency, a digital currency, there are even more. The situation in Russia, problems in Malaysia, problems in London, in the US will impact you. So sometimes if you do not have a huge risk appetite, you're better off investing in something that you have some bit of control over, which leaves us with the stock exchange and instruments we regulate in our industry.
Okay. Now, we've talked about those challenges, maybe companies running bankrupt, companies facing problems. What if these things happen, and which I think they do happen, like you said, I think if you just don't mind mentioning the company, you can tell us that company that made losses and people were running into panic. So what are some of the measures that can be taken in case people have invested in this company and, for example, Uchumi, I think, Uchumi when it left Uganda and even in Kenya it wasn't doing well.
Absolutely.
What are some of the measures taken to manage these risks so that they are not so much weighed on the shareholder?
Okay. The number one measures we should take is to seek advice from an expert. I think that is if I was to give advice, that would be one of the best I could give. If you notice with the MTN IPO, many experts mushroomed. Somebody would read a social media article, somebody picking up some misinformation or fake news. Mobile money is not going to be part of the IPO, and for some reason everyone confused others. So that creates extra confusion for you. But if you're out there, you speak to a licensed advisor by the Capital Markets Authority or the USE. You explain to them, I'm maybe 55, I'm about to retire. I need something that can give me the income which I'm going to lose when I'm out of the job. They can advise you on which stock to invest in. Or like Anthony, you're young, you've placed all your money in land, you've bought pigs, you've bought cows, and you need something extra. You explain to them your dreams, they can give you that advice. Even after putting all your money maybe in Uganda craze and it maybe doesn't perform to your expectations, these advisors can help you and you invest in something that can maybe improve on your performance. The other piece of advice we give is diversification. Shares are not a problem actually, and no share is bad. The problems Uchumi may be facing, Kenyan Airways, have already been faced by other companies like Uganda Craze, BAT, but somehow they got out of them. As an investor, if you're able to diversify your investments, even in shares themselves, this month you buy DFCU, next month you buy Nation Media, the other you buy MTN, a problem in one company can easily be offset by a gain in the other. Because these companies are just like humans, they are seasonal. One may be excellent at a certain time compared to the other. Then also that long-term perspective, which is critical. The reason why many of us lose money to these schemes, people who promise us these weird returns, is because we have that quick Kagwirao mentality. If you're able to give a company time, you buy shares in Quality Chemicals, in MTN, give them time. In fact, keep buying even when maybe the share price is going down. You will appreciate these companies better, especially if you keep accumulating positions in these companies over time. And just like I mentioned also, sometimes it's important to start with the little you have. The 50,000, 100,000. You start with that little, gain experience, then you can now increase. You start using the tens and hundreds of millions after you've learned how the markets behave. I think for now those can be some excellent measures. But if you fall in a problem, you've invested in a company, you have a complaint, you've not got your dividend, or you think a company should give you better dividends, you can report to the stock exchange and the authority as well.
Okay.
Yes.
Now, as well, given the challenges we have, there are some people who are actually international investors. If you've been in the news in Kenya, we have had the IPO go electronic, you know, and people want to start trading online. And the Kenyan government says that they want to have more investors that are local, because the challenge they are facing is people from Germany, Elon Musk and so on, and people from America are coming and investing in the big companies, making profits and taking them back to their countries. And now instead the country is losing out. How is the Uganda Securities Exchange trying to manage this in a way that we encourage local investors to invest in stocks and shares rather than foreign investors invading the whole thing? Yes.
Yeah, very excellent submission, Anthony. To encourage local participation, the USE and to some extent major players in the financial markets like CMA and BAU have undertaken initiatives to make trading as easy as possible. Those days for you to open an SCD account, which is a trading account, to allow
Security
you
Central Depository Account.
Yes.
Yes.
For you to in order to be registered to buy a bond or a share, you needed to complete a form, take it to the stockbroker. The stockbroker takes that form to the USE. Then you go back to the broker. So it was a little bit of a bureaucratic process. But as we speak, at a click of a button on your phone, *165#, even with Airtel, with MTN, you're able to register and get that SCD account, get the stockbroker. Now, where we are currently, we are finalizing the steps of trading. With your mobile money on MTN and Airtel, you're able to simply place your order to buy a share of MTN, of Stanbic, of DFCU at the convenience of your home. So that alone is going to increase the participation of the retail investors. Then we have we have these online portals. We have VisiPortal, which allows you to view your portfolio online, even to send instructions to your broker. You're able to sell those instructions also on WhatsApp and email. So as we make that process easy, that convenience, more retailers have already increased. Just a year ago, we had only 30,000 registered investors, but as we speak, we have close to 200,000 registered investors.
Wow.
So that is already testimony to the fruitfulness of these initiatives.
Yes.
Then once people sell shares, those days it would take you a week to get your money after you've sold shares, but now it is as low as 2 days. 2 days later, it's even going to be reduced to a day.
It takes 2 days for you to...
Yeah, once your shares are sold, to get your money.
Your money back.
Yes, but through what we call settlement, the settlement process.
Yes.
So we are making all those processes easy. Yeah.
Okay. So interesting. So it means that if people can actually use their phones to buy shares and get accounts and get...
Yes.
I think that would be the best way to actually attract more people.
Yes.
Now, as well, we have a challenge of having few companies listed. Yes, you talked about companies being educated and all this.
Yeah.
But what is the plan of USE in terms of increasing the listed companies, especially the local companies? You said we have 10 so far, and 8 cross-listed, right? Now, how can we increase the number of companies that have been cross-listed and also reduce dominance? Like I said, in Kenya, you know that Safaricom, East African Breweries, and KCB, and there's another company, I think Centum, I don't know, but there are 5 big companies that are dominating the market. So how is USE going to go about this?
Thank you, Anthony. It is very true. The 18 listed companies in 25 years is not so excellent per se, but in order to attract more listings, we had to create that segment for the not so big companies, the segment we called the growth enterprise market segment. It was started about 8 years ago, and what we are doing currently is to create a lot of awareness as much as possible. Why we believe the stock exchange has potential is because many people are actually looking for finance. But if you are to conduct a census, ask the business community, how are you getting capital? 99.9% will say, I'm borrowing from a bank, borrowing from a microfinance. So we are actively conducting awareness with, of course, the CMA and other related institutions, just to to educate the businessmen that you can actually find cheap patient capital from the stock exchange.
Well, why is it called patient capital? I have always wondered.
Patient, because with equity, once you sell shares and maybe get 50 billion shillings, nobody will come knocking at your door every month asking you to pay back interest.
Yes.
But the bank will come every month, interest has to be paid back to them.
Meaning companies that have actually been listed to get capital, they are at zero interest.
Yeah, you don't pay interest.
Yes, you don't pay any interest.
Yes.
Rather now you expand your company, you make more profits and pay back your shareholders.
Absolutely.
That's
through dividends and through the appreciation.
That's very interesting.
That good performance you give the shareholder translates into appreciation in the share price.
Okay.
So we are conducting that awareness. Then like I also hinted, we have created what is called a specialist market. It's some kind of incubation, a segment to maybe make smaller companies ready to list their shares on the stock exchange. Yeah, those are what I could speak about for now.
Okay.
Yeah,
thank you very much. That's very interesting and insightful, in that if companies can really come and get capital at zero interest rate, instead banks are hiking their interests and so on. I think that's a very good way to actually go. So dear viewers, we are going to a short break, but when we return, we are winding up this with Mr. Mwima on the current stock market prices. We want to look at the companies now. We want to actually see the practicality of investing in stock markets. We are going to have a list of companies and we see which company is doing good, which company is doing bad, where can people invest, and the investment advisors, how can they advise people from an informed point of view. We'll be right back. Don't go away.